Hello, my fellow educators. Would you want to earn an extra income? Do you like to invest in a real estate property such as hotels, condominium units, subdivision, or shopping malls? You might be thinking of a big capital, but certainly not. This video is for you. I will be introducing to you an investment plan known as REITs, or the Real Estate Investment Trust. This presentation is divided into 5 main parts. First, we'll be talking about what is REIT. Second, the benefits of investing in REITs. Next, how to earn from investing in REITs. Third, what are the existing companies that offering REITs and how to invest in REITs. Let's start with the first part, the definition of REIT. What is REIT all about? So the real estate investment trust in the Philippines are a form of investment vehicle that allows individual to invest in an income-generating real estate properties without having to directly buy, manage, or finance them. We are simply passive investors. Instead, investors can purchase shares of publicly traded REITs listed on the Philippine Stock Exchange, which own and manage a portfolio of real estate assets such as office buildings, shopping malls, residential complexes, hotels, and industrial properties. REITs in the Philippines is regulated by Republic Act number 9856, known to be as the Real Estate Investment Trust Act of 2009. This legislation provides the framework for creation, registration, and regulation of REITs in the country, and REITs is managed or it is regulated by the Securities and Exchange Commission or SEC. And one good thing in REITs, why the investors are encouraged, because in the Philippine government, it offers tax incentives to both REIT companies and investors. REIT companies are exempt from corporate income tax, provided that they distribute 90% of their distributable income as dividends to stakeholders. Philippine REITs typically invest in various types of real assets, including commercial, residential, retail, and industrial properties. One of the primary attractors of investing in REITs is the potential of high dividend yields. The introduction of REITs in the Philippines has been met with an enthusiasm from investors and market participants. Since the launch of the first REIT in 2020, several other companies have followed suit, indicating growing interest in the investment vehicle. Now, what are the benefits in investing in REITs? First, diversification. Because if we invest in REITs, it can benefit the investors by offering exposure to a wide range of real estate assets across different sectors, such as residential, commercial, industrial, healthcare, and hospitality. And we also have what we call liquidity. Unlike physical real estate investments, which can be illiquid and require significant time and efforts to buy and sell, REITs are traded on stock exchanges, providing investors with liquidity. One of the benefits in investing in REITs is a steady income, because if we invest in REITs, REITs are required by law to distribute a significant portion of their income to shareholders in the form of dividend, which is 90% of the distributable income. How about inflation? What will happen to our investment if there's an inflation? Real estate tends to perform well during inflationary periods, since property values and rental incomes often increase with inflation. And the last is professional management. REITs are managed by experienced professionals who specialize in real estate investment and management. How can we earn from REITs? There are 2 ways on how we earn from REITs. First is the dividend income. REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividend. This makes them a popular choice for income-seeking investors. And REITs distribute their income. It could be monthly or quarterly or semi-annually. Because of the requirement to distribute a significant portion of their income, REITs tend to offer relatively high dividend yields. Second, we have the capital appreciation. So in addition to dividend income, investors can also earn returns from REITs through capital appreciation, which refers to an increase in the market value of the REIT share over time. REITs own and manage a portfolio of income-generating properties such as office buildings, shopping centers, apartment, and hotel. As the value of these properties appreciates over time due to factors like increasing demands, improving economic conditions, or strategic renovations, the market value of REITs shares may also increase. And this time, if you are actively involved in investing in REITs, you can share your REITs and earn from it. You can earn a profit because there is already a high value of that share. What are the existing companies that offering REITs investment? At this moment, there are 6 companies which are offering REITs. First, we have the Ayala Land Incorporation or the ALI. We also have the Double Dragon Property Corporation. Next, we have the Phil Invest Land Incorporation, the Mega World Corporation, the SM Prime Holdings Incorporated, and Robinson's Land Corporation. And how to invest in REIT? If you are interested, first, we need to direct purchase of REIT shares. One of the most straightforward ways to invest in REITs is by directly purchasing shares of public listed REITs companies on the Philippine Stock Exchange. We can also invest in REITs through participating in initial public offerings. When a REIT launches its IPO, investors have the opportunity to purchase shares at the initial offering price before they start trading on the stock exchange. We can also invest in REIT mutual funds or exchange-traded funds. For investors who prefer a diversified approach, investing in REIT mutual funds or ETFs can be a suitable option. We can also invest through real estate crowdfunding platforms. There are already available online platforms allowing investors to invest in real estate properties or projects indirectly through REIT-like structures. And the last, we have to utilize REIT investment trust accounts or the RITAS or the REITAS. In the Philippines, REIT investment trust accounts or REITAS provide tax incentives for qualified investors who hold their REIT investment for a certain period of time. Thank you so much, and I am hoping that you're interested to invest in REITs.